Can this rally be sustained?
Well, I think you have to kind of stand back and look at the bigger picture. The rally that we saw, for instance, in the late 70s and the early 80s was something that was remarkable at the time. But if you look at today's rally in comparison, it's still barely a scratch on that. I'm not obviously saying that necessarily it's going to go to the same extremes. We're already ahead of it in nominal terms. But in terms of when it's a regime shift, which is what I think we're in today, you have to keep an open mind. So, I think it could be a slightly more tougher year for gold next year. Like, it could be more volatile. There could be a pullback on the way there. But the fundamental reasons, I think, for the bull market remain intact. So
what is driving this? What are those fundamental reasons? Why are we seeing gold at well over $4,300 a troy ounce?
Yeah, I think, look, there's quite a few things going on. I mean, the initial driver of the rally this cycle was emerging market central banks started buying. I think they started to feel, especially after the financial crisis, but more so after the Russia-Ukraine war, that their risk of their assets, dollar assets, being seized was something that they wanted to or didn't want to live with. So they started to diversify. Gold is obviously the natural thing for central banks to buy, but that has widened to retail traders. Retail traders are now starting to buy more and more gold out of Asia as well, I might add, and in Europe and the US. They were a little bit slow off the mark, but they certainly are participating right now as well. So you've got this rally that's kind of broadening, but what I think people are really worried about really is gold is a tail hedge. It's not only is it an inflation hedge, when I say inflation I mean extreme inflation, it's also a deflation hedge as well. So the two tails of inflation is when gold tends to do best. It's not an overall inflation hedge, because when inflation's kind of petering around the middle, gold's not necessarily going to be the thing that's going to salvage your portfolio. But at extremes, it's something that is beneficial for portfolio. People think Bitcoin might be an alternative, but in this environment, I think it's untested. Bitcoin may end up well pulling through the next kind of crisis that we have, whether it's governments debasing their currencies or there's some sort of private credit event and there's debt deflation. But at the end of the day, if you want to take insurance, you probably want to go for something that has worked in the past, and that applies to gold.